And welcome to Unity in the Community. The Unity in the Community show embraces the city, which is diverse cultural communities, the music, the arts, and healthy lifestyles. And in this edition of Unity in the Community, it's going to be an interesting one because usually we talk about the community, of course, but we also talk about multiple aspects about the community. When it comes to nonprofit agencies supporting our young people, we talk about companies that are supporting the community. But in this particular instance, it's always been a talk about real estate, whether you're a landlord, whether you're a tenant, or whether you're prospecting to try to own home ownership. And so today we're going to have a great conversation, an insightful conversation with Raymond Capece. He's an attorney in real estate, and also Chad Rankin. He's the mortgage originator. He's also known as the team leader. And they're joining us here on Unity in the Community. Welcome, gentlemen, for Unity in the Community.
Thank you. Thank you, Ernie. Thanks for having us.
Thank you. I'm excited to have this conversation because when it comes to investments, when it comes to real estate, there's a lot of questions. And a lot of people in some instances are confused and not sure where to go, what to do. And it all depends upon who's sharing that information. So I'm going to start with you guys. And Raymond, no, I'm starting with you, Chad. Chad, tell us a little bit about your background first before we get into our conversation about real estate in our community.
Sure. So I've been in the mortgage business for 17 years. I have been in Worcester proper, my office on Grove Street, since 2009. And I just kind of fell in love with Worcester. I commuted for about 10 years into the city, ended up buying my forever home here in the city, and just have been invested in. And so it made sense to actually move my family here. And I noticed this back in 2009, 10, 11, 12, as I was getting really into the business, that it's a special place. It's a small city, but it's a city, and it's got, immigrants and people from all over the world. So it's been fun. I enjoy helping people buy homes and, transformationally change their family's future. And so it's a small city, but it's a big city, and it's extremely diverse. So we've helped immigrants from 70 countries buy homes. And that's something that carries with it a lot of education, because folks many times are first time, homeowners. And so they recognize many times more than a lot of us that were born and raised here, just the value of homeownership and the opportunity that does exist here in the U.S. that may not have, from where they originated and were born. So with that, again, a lot of education, and it's something where, a lot of times folks don't even know the process. So we just walk them through it from beginning to end. And that's pretty much kind of what we do.
Yeah, thank you. Appreciate that, Chad. We also have Raymond Capece, you're an attorney.
Capece.
Capece,
Yes.
Attorney, real estate, and
Yes.
both these gentlemen are together.
Correct.
So tell us about your background and what your role is as partners in your firm together.
Yeah. So Chad and I have been working together for about 12, 13 years now. And my office is a boutique law firm located on Salisbury Street, 39 Salisbury Street. And we specialize in residential and commercial real estate transactions. So generally speaking, Chad's clients, after they're approved for a loan and they found the home that they'd like to purchase, come over to our office and we close the end of the deal. And we assist Chad along the way with, helping the buyers achieve their goals, really.
Yeah. I really appreciate that. And there's different individuals or organizations that are in the same position as you gentlemen are. And everyone has their different approach on how to go about it. Some are in it just for the business to make the money, and some are in it to really give back and make sure that the American dream is achieved by individuals. And especially with the fact where there's some instances where some people who've been here all their lives and not have owned a home. And there's individuals that have come here from other countries, and they're here and they work just as hard, if not harder, and they own a home. And so between you two, with compassion comes in. And the reason why we're having the show is because of the fact that I want to see how people who are interested and getting into their first home are able to achieve that. And because of the fact that everything is going up, the fact that we're having some worldwide challenges, and let's see what happens if we can make some dreams come alive here. Okay. So once again, joining us is Raymond Capece. He's an attorney, real estate right here in the city of Worcester, downtown.
Right. Simonian and Murray.
Simonian and Murray, and Chad Rankin. He's the mortgage originator. He's the team leader.
Yep, at Guild Mortgage on Grove Street.
Yeah, right. Okay. So as we continue this conversation, all right. So now someone's interested in a home, and there's multiple different homes. Okay. So I'll leave it up to you guys who wants to go with homes. There's there's a single family, there's a 2-family, and there's 3-family, and it goes down the whole rank. Then there's commercial. So just describe the different definitions of a single family, 2-family, there's a 3-family, and then you get into commercial property. Who wants to start with that first?
Sure, I will. So we are in residential mortgage lending. So we're stuck at 1 to 4 units. So triple decker or, 4-family, that's all, can be securitized and lent on, through Fannie Mae, Freddie Mac, FHA, the different kind of mortgage backing options, mass housing. So there's obviously a single family is a single family, right? But then there's also condos. It's just different types of financing, different technicalities in financing those, but single unit condos. And then you've got the 2 to 4 units, and that's the same essentially type of financing for 2 to 4, unless you get into some really specific things with an FHA 2-family versus a conventional, but we won't go there.
Right. Okay. When you come into the multi-dwellings,
yeah.
When you get into the 2-family or the 3-family, or in some instances the 4-family, what is the ideal of a person who's thinking that I may just want a single family pertaining to my family only? I don't want to be a landlord. Or in some instances, somebody say, I want to be into a 2-family, because with the 2-family, somebody's sharing in the expenses as well as the 3-family, as well as the 4-family. What's the mindset of someone who interested in just a single and not want to get into a 2 and or 3 or 4?
It's a great question because it's something that we talk about regularly. My first home, Trevor, one of my loan officers as well, his first home, we both had multifamilies. He had a 3, I had a 2. He was here in Worcester. I was in Southbridge. And just for the reasons you just said right there, I was looking towards a 3-family myself, but I loved the 2-family house and the scenario. And so that's why I bought that. And so there's conversations that people have. It's not that I didn't so much want to be a landlord to 3 or 4. A lot of times people choose to go with a multifamily because when you're buying your first home, you can get into a multifamily with as little as next to nothing out of pocket, depending upon the type of financing. Technically, with FHA, you can buy 2-family with 0 down, with down payment assistance. Mass housing, they'll cover 2 out of the 5% down payment. You can get into it with 3% out of pocket. So Fannie Mae, just flat Fannie Mae is 5%. So somebody can get into a home, whereas if they were to buy a single family first, they're now going to be stuck at buying a multifamily at investment down payments of 25%. So if you're considering, and this is really what it comes down to, if you're considering someday holding additional real estate, it's best to start with the multifamily. Buy your single family later. And in fact, we're going to be able to use the Schedule E rental income that you're declaring on your tax returns to basically pay for and cover that entire mortgage on that multifamily, including your departure unit that's not even rented out yet, so that you can actually even duplicate what we're talking about here.
Yeah. When you say Schedule E is where when you do your taxes at the end of the year, and when they go to the Schedule E, it just documents the income that's coming in for that particular unit.
Yes, exactly. And it has a portion for your write-offs. And for our math and underwriting, you can look like you're making $0. You're even taking a loss on that property, but we've got a calculation where we add back things like interest paid to banks, taxes, insurance, depreciation, those 4 things. So just on paper, it can look like you're not making anything on that property, but for our purposes, you are. It's just a technicality, but we have those conversations with past clients all the time that are planning to go into that single family or that next multifamily, depart that, and make sure that they're speaking with a CPA or somebody that knows what they're doing so that it actually, is feasible to do what we're talking about.
Okay. So in layman's terms, basically is what you're saying is we'll just say a $1,500 a month mortgage. Okay. In that particular property. And on paper, you're saying, okay, next door is bringing in, just for numbers here, $500, and you're personally bringing in, if it's a 2-family, you're bringing in $500. So that means you're at 1,000, but the mortgage is 1,500. And so now the person's looking at like I thought this was supposed to make it on a ease for me and make it so that next door would contribute. But then at the end of the year, you're saying that even though you're upside down, meaning you're $500 that you have to actually, so you're actually paying 1,000 and the neighbor's paying 500. But you're saying when it comes to you, Schedule E, and it's time to do the taxes, then there's deductions when it comes from the government, and that's when you make the magic happen. And then at the same time, they may have a refund at the end of the year.
Yeah, so I would always advise that they speak to a CPA on the tax stuff right there, but the tax stuff that, really matters in terms of being able to finance another property later is just making sure that you're declaring the rental income from the other units correctly. So in your example, it's perfect. I'll give you my first property that I bought in 2011. My payment was $2,200. My long-term tenant was paying $800. So I paid $1,400, right? So what was that? It wasn't a break even like you can get when you buy a 3-family. A lot of times you can get actually a break even where the 2 tenants are actually covering your entire mortgage and you might be paying just the water, sewer, and so forth. In this case, it was what we call like a mortgage helper. That's more so of what a 2-family is. Now it's still an investment because you're getting this property for less than what you would be able to pay for a mortgage on a single family, right?
Mm-hmm.
And historically, they continue to go up in value.
Okay. Joining us now, once again, you just heard was Chad Rankin, mortgage originator and team leader of your particular company.
Gill Mortgage.
Gill Mortgage.
Yeah.
And we also have Raymond Capece, attorney, real estate.
Yes, at Simonian and Murray.
Simonian and Murray. So you guys teamed up. Now you guys could have teamed up with anybody. Okay. You could have went left. You could have went right. For some reason, you guys got together. Why was that?
The biggest thing that I've seen, and in this industry, any industry for that matter, really is just how people partner together to achieve the same exact, mission or goal. And it really comes down to the quality that they provided. So I first started working with them in 2013, and the quality just stood out. So like they've got a team of a few paralegals. I've got a dedicated paralegal for any questions, anything that I need, or I've got Ray or attorney Mike Murray from Simonian and Murray, one of the founding members. And they're a small boutique, that just give this service to both myself, my team, and my clients in a way that I just don't see commonly. And so that's where it grew.
Yes, yeah, I agree. Chad is fantastic when it comes to, again, putting people in the correct loan program that they need to be in, and also raising awareness that home ownership is achievable, because I feel most people don't have access to the tools that they need to purchase a home, and there are multiple programs out there available to people to purchase a home, which is in most cases the largest investment, and it retains value, and it's an investment that can be passed on to future generations.
And it's an investment in the future generations.
Right. So you make a good point, Raymond. The fact that there are 2 types of people, right? Some that have the money and some that don't have the money. And those who have the money, just because they have the money doesn't mean they have the knowledge on how to invest that money. And those who don't have the money may feel as though that, okay, I can't even get into the game. And then you realize that depending upon the nature of the certain programs, there are programs that allow you to get into the game.
Correct.
All right, so we're going to talk about that when we return right here on Unity in the Community. I'm Ernie Floyd. Joining us is Raymond Capece, as well as Chad Rankin, and I'm Ernie Floyd. You listen to Unity in the Community right here on Unity 979, Worcester's Community Connection.
Unity Radio. Worcester, we've got you.
Support for Unity Radio 97.9 FM is provided by United Way of Central Mass, aiming to improve the community and break the cycle of poverty, and the Woosocks Foundation, seeking to make dreams come true for families in areas of education, social justice, recreation, and conquering cancer. Unity Radio, Worcester's community connection.
Unity Radio is streaming at WTY979fm.org. We'd like to thank our listeners and supporters.
TD Bank, America's most convenient bank. TDBank.com. Harvard Pilgrim Healthcare of Worcester. HarvardPilgrim.org. And Wings Over Worcester. WingsOverWorcester.com.
Unity Radio, Worcester's community connection. Hi, I'm Ernie Floyd, host of the Unity in the Community Show on Unity Radio 97.9. Join me and my guest as we discuss topics on embracing our diverse cultural communities, the music, the arts, and healthy lifestyles. I'm Ernie Floyd, host of the Unity in the Community Show, Wednesdays at 3 p.m. on Unity Radio 97.9, Worcester's community connection.
Let's focus on the facts. About 1 in 8 men will be diagnosed with prostate cancer during their lifetime. But education and support are just one click away. On Friday, June 5th, the Massachusetts Prostate Cancer Coalition, MPCC, will hold its annual symposium, virtual and free, from 8:30 a.m. to 11:30 a.m. Eastern Time. Join us. You will receive the latest information, treatment options, and research. All are welcome. Men, caregivers, and medical professionals. The focus is on men's health and ways to live beyond diagnosis. To register, visit masspcc.org/events.
This is Unity Radio 97.9 Worcester.
And once again, welcome back to Unity in the Community. I'm Ernie Floyd. The Unity in the Community Show embraces the city versus diverse cultural communities, the music, the arts, and healthy lifestyles. And we're talking about community, we're talking about investments, we're talking about home ownership. And joining me is Simonian in Murray, and the owner of that is Raymond Capece,
Yes.
an attorney in real estate. Thank you very much. And Chad Rankin, mortgage originator and team leader. He's with Guild Mortgage. And
Yes,
so
sir.
there's hope out there, right? Despite the fact that the interest rates could be going up in some instances, and we found out that they are, but that's okay though, because the fact that, as I mentioned earlier, if you have money, that's great. That means that potentially you can get into the game. But if you don't know what you're doing, you need to find somebody who can help you and to organize, and so that you make sure you make the right investment. And if you don't have the money, don't fret or fret, all right? Because of the fact that there's different multiple programs out there that'll jumpstart you to get you into the game, right? So there's hope out there overall. So when we continue this, and it's about the community, because the community is affected multiple different ways. It's affected by taxes, it's affected by, obviously, the neighbor, it's affected by the residents, it's affected by the overall the city and how the city maintains those particular communities and those neighborhoods. When people come to you and they're interested in the home, there's different makeups of our community here in the city of Worcester. You obviously don't recommend one neighborhood over another neighborhood. You cannot do that, of course. But when they come to you just in general for single residence, a 2-family, or a 3-family, and a 4-family, there's different requirements, there's different rules, there's different regulations when it comes to that. And that's where, Chad, you come in and you help assist them in that. And someone comes in, hey, I think the thing to do is get a 3-family. And you say, okay, fine, come on in. And you go right down those guidelines in reference to making sure that they're interested in 3-family. So now my question to you is, you may look at what their income is, you may look at their objectives, and you may say, it's not matching up. Do you assist them in saying that, I'm not sure this is good for you, meaning the fact that you're in it for the wrong reason, or you're in it because it may not be the way you should be getting into it. And to your experience, because of the fact that in the end, you're writing this mortgage. So you want the right people in the right place at the right time.
Yeah. So my viewpoint on homeownership is, if you can afford it, go for it. And it's something that, a lot of people, they want it, but they just don't know what they don't know. And they don't know if they can afford it. And at the end of the day, we've got strict underwriting guidelines that, debt to income ratios that have to be met to be a quote quality mortgage backed by the government. And, we have to meet that. So the question a lot of times is, where do you stand right now? And does it make sense right now? with higher home values, higher interest rates. Can you afford it? We just do a deep dive on that. And, you know, a lot of people really, even if they've looked into it previously and spoken with a bank or another lender, and many times they walk away with no clarity about where they are right now or why they were declined. They simply get a letter in the mail with a declination or, you know, a checkbox reason. So what we do is we take the time to clearly explain why they are where they're at and what, if anything, there is to do to get them into a place. And I tell people all the time, if you've got the income, right? If you've got the income coming in, whether or not it's job, whether or not it's Social Security, whatever it is, if you've got income coming in that supports a mortgage payment, there's just about no time where I can't help somebody get ready in the next year or so to buy a home as long as they've got the income. If you don't have the income, we can't put you into a $500,000 house, with a $3,500 mortgage payment if you can't, set you up for, failure, right? So it's all about, can they afford it? And a lot of times we're helping folks that know that they can afford it. They just kind of feel like, discouraged because they haven't been shown how to get there. And, that's what we see regularly. They just need explanations about what they need to do, whether or not it's fixing their credit or they need another 6 months at their second job in order for us to use both of those incomes. The list goes on, but that's why we literally do a deep dive, because everybody's situation is unique. However, I've seen thousands and thousands and thousands of, situations over the last 17 years. We've helped thousands of families buy homes. So that's kind of the way we go about it.
Okay, Raymond, tell us about the legal aspect of it. Mortgage originator, people come in, they're interested in buying a particular home.
Sure.
Chad does all the pre-requirements, making sure that the I's are dotted, the T's are crossed. But there's a legal aspect, and that's where you come in.
That's correct. That's correct, Ernie. So after Chad, sends over the processed application and has the buyer, and typically the buyers are sent through the real estate agents, and once it arrives at my desk, it's a matter of negotiating a contract and speaking with the buyers, making sure that we have everything that is in place for them to proceed and make it as seamless and stress-free as possible. But so the main thing is the title issues that we try to rectify prior to the closing, and just answering any questions, because first-time home buyers typically have it's an uncertain.
Sure.
It's an uncharted territory for them. And Chad and I have been doing this now, almost 15 years. So we're very well aware of almost every scenario that could possibly pop up. Mm-hmm. And not only that, but how to deal with it and provide the buyers with a solution to move forward. Chad's excellent at that. He works with a number of people and to help them better their credit, to put them in a position to purchase the home that they want. He's done it multiple times, and the people are very happy. And it's a matter of just getting the word out, because again, as I mentioned before, I just don't think enough people are aware of the fact that they can achieve home ownership.
Mm-hmm. Well, it all comes down to depending upon who they're receiving the information from. And I think the news sometimes that we see all the time doesn't help as well, because the news more often than not is always dire straits. We got a war. There's a challenge in a particular community. They talk about the job market. They talk about the stocks. They talk about a number of different things. And more often than not in the news, it just seems as though that, and plus what people are experiencing every day, trying to get their kids on the bus, going to school, they have to go to work, maybe not making enough at work to meet the demands at home. And who's thinking of a home, or who's thinking of another burden, if you will, or when it comes to trying to own a home. But then sometimes people break through and they feel as though that, okay, we're going to give it a shot and we're going to see what happens there. Now, we all know there's different communities here in central Massachusetts, and someone's going to come to you and they may want to be in a certain particular community. So home is a home in a sense to you guys. You don't say, okay, you want to be in this particular town or this particular community or this particular neighborhood. Your focus is basically on that particular property. Is that correct? And
Yes.
somebody wants to go into that particular home.
Yes, if they made their decision to choose the home that they, the one that they want to live in, yes, we're going to do everything we can to make that happen.
Okay. So now going back to if anyone that's interested, joining us now is we have Raymond Capece. He was with
Simonian and Murray.
Simonian and Murray, and Chad Rankin, and he's with Guild mortgage originator and a team leader. And when it comes to real estate and it comes to the community, it's very important the fact that we're saying basically the residents or the individual, no matter where they come from or no matter what the ethnicity is, you want to make it known that it's possible. And so before you put them through the whole process to protect their credit too as well, you do a preliminary as well so that you don't put a hit on their credit. So when someone says, when you say to them, hey, I don't want to hit your credit, and they go, what does that mean? What does that mean? And you want to do a preliminary as far as qualifying that particular individual or organization to achieve a mortgage for that particular property.
Yeah, it's a good question because not all lenders are the same in that regard. Many,
Correct.
I would say I think just about all major banks and credit unions and so forth will do a hard credit inquiry when you're starting the process of a pre-approval application. We start with a soft credit inquiry always because we intentionally try and aim to help everybody that can theoretically possibly buy a home that dreams of owning a home. And so a lot of times that starts with folks that aren't there yet. And so we don't want to ding the credit. We don't want to do a hard credit inquiry when I can do a soft credit inquiry, and we can even run the decision engine with a soft credit inquiry. So what that's going to allow us to do is then put together a plan of action and give them a timeline. I've got all sorts of tools, what if scenarios, credit simulators, and so forth and plus tricks that don't even come up in those programs that I've learned over the years. And I can direct them in terms of what to do at that point. So why would we want to do a hard inquiry when we don't need to?
Right. So when you do the soft, basically you're doing this, you're putting all the formulas together, you're putting all the information together. Because with the soft credit inquiry, you're not hitting their credit, and you say you don't want to do a hard one. In some instances, people don't know what that means, because if you hit the hard one, it could be a situation where you may not qualify, but now all of a sudden you have what they call this ding on your credit, and that could, in the future, be could contribute to a challenge when you decide to, and when you're really ready to be qualified for a mortgage as well. That might come back and haunt you too as well, potentially, in a sense. So you want to do the soft one, because what if all of a sudden they work with you, and the last second, for whatever reason, they decide to go somewhere else, hypothetically, right? So you allow them to be flexible to go somewhere without being penalized or hurt in that sense. Because some instances you just mentioned earlier, some people just grab people and say, okay, we're going to do a credit check and do a hard one, regardless of the situation. And we're going to come back, we're going to have that discussion about that, because of the fact that why would someone hit someone's credit just to hit their credit, just to see if they qualify, whereas they can take the time and prepare them before you hit the hard credit and do the soft one, so that they don't feel that challenge and or that penalty per se, because having a hard credit hit on them, because the next person's going to look at that, they're going to say, oh, someone hit your credit over here, and I'm not sure if that cost them points, I'm not sure if that cost them penalty, and the list goes on. So we're going to talk about that. And we're going to get into layman's terms. We're going to talk about the attorney layman's terms. We're going to talk about the mortgage layman's terms. When people start hearing about these things, they'll at least have a definition of understanding what it's all about. Okay.
Okay.
Excellent.
So give me a chance of this, right? Simonian and Murray.
Yes.
All right, there you go. Raymond Capece,
Thank you.
attorney real estate, and also Chad Rankin, mortgage originator, team leader, Guild Mortgage. And they're with me here on Unity and Community. I'm Ernie Floyd. We're going to be right back here on Unity 979, Worcester's Community Connection.
Unity Radio. Worcester, we got you.
Looking for a meaningful way to engage with your community and make a difference? Volunteer with the Massachusetts Senior Medicare Patrol Program and help prevent Medicare fraud. Visit masmp.org. This project is supported by a grant from the U.S. Administration for Community Living.
Let's focus on the facts. About 1 in 8 men will be diagnosed with prostate cancer during their lifetime. But education and support are just one click away. On Friday, June 5th, the Massachusetts Prostate Cancer Coalition, MPCC, will hold its annual symposium, virtual and free, from 8:30 a.m. to 11:30 a.m. Eastern Time. Join us. You will receive the latest information, treatment options, and research. All are welcome. Men, caregivers, and medical professionals. The focus is on men's health and ways to live beyond diagnosis. To register, visit masspcc.org/events.
Over the years, you've brought them into your home. You were prescribed opioids after the C-section and after Dad's back injury. They helped when you were in pain, and you held on to them just in case. But did you know holding on to unused opioids puts your family at risk? Trouble with opioids can start at home with unused medicines, such as pills, patches, and syrups. You can remove the risk and protect your family. Find out how at www.fda.gov/drug disposal.
Tune into the Sustainable Life with Susan Hewlett, and together we will find our way to a healthier, healing lifestyle by listening to empowering stories of overcoming our struggles. Join me, Susan Hewlett, on the Sustainable Life every Wednesday from 5 to 6 on Unity Radio 97.9 FM, Worcester's Community Connection. See you soon.
You're listening to Unity 97.9 FM, WUTY. Let's talk, Worcester.
And once again, welcome back to Unity in the Community. The Unity in the Community show embraces city which is diverse cultural communities, the music, the arts, and healthy lifestyles. And joining us is Raymond Capece. He's an attorney in real estate, and Simonian in Murray. And also we have Chad Rankin. He's a mortgage originator, team leader. He's with Guild Mortgage. And we're having this discussion about the community, about investment, and how, and we're not talking about when is a good time to buy real estate. I guess it's any time. It's just a matter, you just have to examine and check your background and find out what different programs, and you just got to do your homework, because sometimes it can be better than other times. But usually when they say that, is it kind of usually based on the interest rate, whether you're going to pull the trigger to be like, okay, I want to buy a home now versus another time. There's other different factors too, but does the interest rate play the major role in some instances?
I think it depends on the. I think it depends on the person and your situation. Because for a lot of first time home buyers, they're not familiar with any other interest rates right now. They're only familiar with what the rate is. Mm-hmm. And that's not true for people that already own homes, particularly if you purchased 6 or 7 years ago. You probably have a 30-year fixed rate mortgage at 3.75. Mm-hmm. So the interest rate now would certainly be a hindrance. It would make you second guess purchasing another home
because of the fact that
selling the one you're in.
Because of the fact that just that alone, you just mentioned 3% several years ago, whereas right now it could be 6 and some change, maybe up to 7. That's a difference of approximately about what, $200-$300 in some instances, right?
More than that.
More than okay. I was being generous.
Yeah.
I was being kind of nice.
It could be $1,000 more.
It could be $1,000 more, and some people will be like, "Holy cow!" It might say some other words, but in this case, "Holy cow!" Right? Like, wow. And that goes back to my original question: when is it the time to buy, and when it's not the time to buy? And over the years, my friend would be like, I try to encourage them, get into real estate, I'm waiting for the prices to come down. But I give this scenario. Okay, we'll say the gas is at $1, right? And then all of a sudden it goes up to $1.75. And then it's like, okay, they're going to drop down to, everyone's in shock, right? And then it drops down to $1.25. It's not going to drop down to $1 again. It stops at $1.25, right? And then when it gets to $1.25, and then all of a sudden you have another spike, it might go to $2. Then it might drop down again, but it's not going to drop down to $1 or $1.25. It might drop down to $1.50. So when is the time where you had the chance to buy it when it was at $1, when it was at $1, and I was hoping that it would be below that. but then it just went up twice like that too as well. And as you can hear in the background, little spike there, people are hearing what we're talking about as far as like, wow, put the brakes on that. That's what you just heard the horn there, right?
Right.
So we're talking about. So when is the right time to do it, and when is it not the right time to do it? Because you're in business too as well. And so, how do you make that decision, and who makes that decision?
Yeah, sure. And to what Ray said here a moment ago, it's very important, for all my past clients that bought a home that have a lower interest rate, it can be a deterrent to buy another one because they know where rates were at one point in time. But as a first-time home buyer, you're getting the rate of the day. That's what it is. If you're a first-time driver, you're going to get the rate of the day on your auto insurance, right? It is what it is. So do you still want a car? Do you still want a home? It's the same. So can you afford it is what it comes down to. What we know, and I tell people this all the time, I don't sound like a broken record, but it is transformational, generational transformation that does occur. And I've seen it happen when you become a homeowner and get involved in the community. Pride of ownership, and I could go on and on and on about that. I can see my past clients, working their way up in their careers. And compared to the folks that don't buy homes, I mean, the NAR, National Association of Realtors, states that the average wealth that a renter has is well under $10,000. I've heard different numbers over the years, from $2,900 to $9,000. But the average homeowner in the U.S. is about $400,000. Now, of course, most of that is tied up in equity. But on top of that, people that do, build the confidence, just dig into how do I become a homeowner, they grow in confidence thereafter. I've seen it countless times. So I'm not here to sell anything to anybody. And that's one thing that my past clients will know about me and state very clearly that at the end of the day, I'm just going to answer your questions. I'm going to put you on the right path, and then it's up to you. I tell people a lot of times too, look, this is what you need to do. I can get you there in about a year. Are you going to be the 20% of people that actually listens to what I tell them to do? And if so, we're here to walk with you the entire way. So again, it goes back to what I said earlier. Do you have the income? Can you afford it? Or I've had clients that have come to me and say, hey, we've diligently saved up $10,000 towards a down payment. I say, well, thank you for doing that, but I think it's a lot better for you to use that money to pay off these debts. I'm not going to make you do it now. I'm going to check them off in my application system that they will be paid at or before closing because you have the funds documented. And now we're going to use down payment assistance up to $25,000 with Mass Housing, for example, to cover your down payment. And even the seller can help with closing costs, and you can literally walk into a home and get your deposit money back and buy a home with zero down. So it's about having the conversations that people would never, ever have any clue about. And so how do they get to us? We're on the phone constantly all day long. So it's either my past clients that are referring to us, it's people checking out my Google reviews, or it's realtors that are referring to us. And we don't get the stage to be in front of people as frequently as we would like to share the message of true hope that you can absolutely buy a home if you have the income.
Right. So it's a good opportunity or a good time to ask any time to come to you. Because some people say, well, I'm not going to, in order for me to get a home, I have to have a huge down deposit. And some people may not have a deposit, but are interested in the future. So then you come and you operate two ways. One, as you just mentioned, you may have the 10,000, but guess what? Your ratio, debt to ratio, you got to pay off these other things so we can close the gap, which is a credit card, which could be down, or whatever loan that you have out there to get the ratio down so that there's less debt and you're free, so that then you can afford the mortgage.
I'll give you an example from today: $611 auto payment. And
wow.
Well, and here's the cool thing: they only owe about $4,000 on it.
Oh,
so I'm going to mark that to be paid off. That's with FHA. It requires we pay it off completely. If there's less than 10 payments on a conventional, I can just mark it as though it doesn't exist, less than 10 payments. But those are technical underwriting things.
Okay.
But in this case, it's FHA. It's got to be paid off. So I'm marking it to be paid off. And they're going to pay it off. And so now I can eliminate that $611 payment, which increases their purchase power by $80,000.
Right. And so it goes back to an individual who may not have that money. You still encourage them to come in and talk to you because they can do the soft credit. You can educate them because there's programs out there, right? Classes and there's other different programs. You can educate them and let them know that, okay, you may not have the money now, but this is what you have to work towards you so that I can put you in a situation.
Exactly. And so like I tell people all the time, again, I'm like a broken record. I'm like, years just pass by, right? Snap of a finger will be another year, right? So why not in between now and then you do this, and that, and you'll have a tax refund as well too, because you guys work, right? and then you can take care of that. And by this time, we don't know where interest rates are going to be, but I know that you can eliminate this amount of debt, this amount of payments, which will at that time increase your purchase power by $150,000.
All right, so let's go through the basic steps in reference to purchasing a home. First, somebody thinks about it. They say on the resident side or the individual side, they say, I'm interested in buying a home. Whether they have a deposit or whether they don't have a deposit. That's step one. Okay, then they come see you, and you can determine whether they can afford it or not afford it, predicated on what the mortgage, predicated on the price of the house. Okay, it could be a $300,000 house, $500,000 house, and you go through the whole thing. You give them a lesson in reference to what it is. So let's go through the whole thing in reference to where it involves with you, Chad, and then when it gets to you, Raymond. Okay?
Sure.
Just basic layman terms, okay? So I'm a resident, I'm an individual interested in buying a home. I come to you, and what happens? What's the next step?
I first just ask them what they want to do, and I let them talk. You know, what are they hoping for? What are they looking to do? You know, do they have any kind of timeline? Do they need to be out of lease? Where are they coming from right now?
Okay, so that
what
means
questions do they have for me?
That means I could be renting, I could be leasing, and between those two, right?
Mhm.
Renting and leasing. Then I come to you, and then the next is, okay, I want to buy this $300,000 home or condo. What's next?
If they've got something in particular, then, you know, we're just going to ultimately, I'm going to say, well, the best thing you can possibly do right now is that we dig into your entire scenario. We'll send you an invitation by email for you to apply online with just your name, your phone number, and your email address. I can do that. And then we do that soft credit inquiry. We're going to ask you for your income documents. We're going to do that soft, credit inquiry, I said. But first, when I'm talking with them, typically, and most times they don't actually have a property address in mind. And they just pretty much kind of got up the nerve to have the conversation a lot of times. And they were just directed by somebody who cared enough, a realtor or family member, that said, you just really need to talk to him or his team. Because I've got a really amazing team behind me as well that are licensed. I've got 2 licensed team members on my team. And so we are going to just have an open conversation with them and kind of a lot of times put them at ease that, like, it doesn't hurt you to look at where you stand. Let us dig into it for you and get you crystal clarity as to what you can do now, or is there anything that we need to advise you to do to get there?
Okay. And what that means, I come to the table, and then you want my background information as far as my employment, what my annual salary. Also, I put in there the debt I may have, which is more often than not, it could be a credit card and other different things. It could be a store credit card, it could be a basic credit card, and whatever the case may be. We want to find out what I'm spending. And then after that, basically, you take this information. It could be 1 or 2 different things. Either A, you could take it and examine the whole thing to find out where I'm at in that situation. Okay. And then further on in there, the soft credit is just examination, if you will. The hard credit is, okay, after the soft credit, you feel as though that, okay, this can work. We'll move to the next step, which is the actual. That's the purpose of the hard credit, to get the actual. Then you do your math, and then you see where that lands. Then it comes back to Raymond. Raymond comes into play, and then Raymond has to search that particular property to find out legally where it's at. And when it comes to the title part, I know that you may have some stories about the title, because then you have to do the background on that property.
Correct.
And give us some of the objectives of some of the different challenges a title may give you, as well as other different things when it comes to the legal part of property purchasing.
Sure. So with the title, it has to be good and marketable, meaning it has to be free of any liens that would prevent a sale.
And a lien means that?
So a lien, a mortgage on title is a lien, and most people selling homes have a mortgage. So that would be something that would be paid off, and my office coordinates with the seller's attorney's office for all of that information. But there could be, old credit card executions on title, divorce decrees, mechanics liens are one. So
lien meaning the fact that that person owed somebody, and so they didn't pay that particular person.
Yeah. And that's correct.
Or
yes.
entity. And so they took out a lien on that, so they make sure that, okay, if you sell this home, guess what? You're going to pay me too as well.
Correct. And it has to be dealt with in order for the house to be sold or refinanced, really.
And sometimes people are surprised. They didn't know that the title was not clean and clean in the sense that not to have liens.
It's correct. Right. And that's the reason people should have title insurance.
And we'll talk about that when we come back.
Thank you.
Simonian and Murray, which is Raymond Capece. He's an attorney in real estate. He's joining me. And also Chad Rankin, mortgage originator and team leader, Guild Mortgage. And we're going to let you know all the information on how to reach them because they're personable and they have compassion. And just have a simple conversation, whether you can own a home or not now, but maybe in the future. You listen to Unity in the Community. I'm Ernie Floyd on Unity 979, Worcester's Community Connection.
Alvin Familia, president of the Manny 267 Foundation. And you're listening to Unity Radio, 97.9 FM, Worcester Community Connection.
Hi, I'm Ernie Floyd, host of the Unity in the Community Show on Unity Radio 97.9. Join me and my guest as we discuss topics on embracing our diverse cultural communities, the music, the arts, and healthy lifestyles. I'm Ernie Floyd, host of the Unity in the Community Show, Wednesdays at 3 p.m. on Unity Radio 97.9, Worcester's Community Connection.
Activa la radio y Unity Radio 97.9 FM te invitan a escuchar el bloque latino todos los sábados de 7 de la mañana hasta la 1 de la tarde por los 97.9 FM en la ciudad de Worcester.
Hello, I'm Pastor Sharon Henderson of Covenant St. Andrew's United Methodist Church, 24 Hamilton Street, Worcester, Mass. We welcome you to worship with us every Sunday at 10 a.m. Let's worship together and love one another. I'm Sharon Henderson, pastor of Covenant St. Andrew's United Methodist Church, 24 Hamilton Street. We welcome you to worship with us at 10 a.m. every Sunday. Let's do it together and let's make peace.
Let's focus on the facts. About 1 in 8 men will be diagnosed with prostate cancer during their lifetime. But education and support are just one click away. On Friday, June 5th, the Massachusetts Prostate Cancer Coalition, MPCC, will hold its annual symposium, virtual and free, from 8:30 a.m. to 11:30 a.m. Eastern Time. Join us. You will receive the latest information, treatment options, and research. All are welcome. Men, caregivers, and medical professionals. The focus is on men's health and ways to live beyond diagnosis. To register, visit masspcc.org/events.
What's up, Central Mass? This is Angelo Gray, and we want to thank you for all your support. And you're listening to Unity Radio 97.9, Worcester's Community Connection.
This is Unity in the Community, and I'm Ernie Floyd, and the Unity in the Community Show embraces the city versus diverse cultural communities, the music, the arts, and healthy lifestyle. Simonian Murray, which is joining us. This is Raymond Capece. He's an attorney in real estate under that company, as well as Chad Rankin. He's the mortgage originator, team leader, Guild Mortgage. And how can people reach Guild Mortgage? Where is Guild Mortgage, by the way?
So we are on Grove Street, 324 Grove Street in Worcester, across the street from where Jillian's used to be, if you know.
Yeah.
I've been in that building since 2009. And we're right next to the Shell, it's right next to the Shell gas station there, kind of where Park Ave and West Boylston and Gold Star all meet up.
Simonian Murray, Raymond, where's your office at?
So we're at 39 Salisbury Street, right on the corner of Salisbury and Grove on the second floor.
And that's right across from the old Worcester Vogue.
That is correct.
Mhm.
Yes, right across the street.
So we're coming together. And so we went through the steps earlier, right? We're talking about community, we're talking about real estate. We're trying to encourage people basically to go out and examine. It's free to examine, right? Just
Yes,
takes a little time, a little
absolutely.
effort, and you're welcoming that. I can't promise, and you can't promise everyone does this, right? When it comes to the soft credit, you have that compassion and say, hey, let's see if you fit this and see if this can work. Because it makes no sense hitting the hard credit, which they used to do in the past, right? Regardless, right? And because of the fact that now the offer, how long has that been? Because in the past, you had to hit the hard credit and everybody would be like, oh goodness, all right. But now with the soft credit, at least it's kind of like a qualification, if you will, examination, if you will, before you hit the hard stuff. Because the hard stuff can cost you because it can cost you points if people see your credit.
Yeah, it's about 3.5 years, I think it is now, that we've been doing soft credit inquiries ahead of time. And with the conventional financing through Mass Housing or Fannie Mae, Freddie Mac, we can actually run the decision engine. So if you got good enough credit, if it's FHA, we still start with soft credit. We just can't run the decision engine. But we're starting with soft credit so we can see, because we know guidelines. Like my FHA zero down program has a minimum 600 FICO. So if you're at a 560, I'm now going to tell you how to get back up over 600 or as high as you can. And we never had to do that hard inquiry until later when we have a good enough FICO and we're going to run the decision engine.
Okay, so let's slow down here. What is a credit score? First of all, we all have credit scores based on our credit. What's the credit score?
So there's many different models. There's consumer credit scores. There's credit scores based off of the auto industry or the credit cards, and then there's a mortgage focused one. And so the FICO credit score is just a model that basically predicts, your credit worthiness based upon all of the different elements, on-time payments, balances, credit utilization. If you've got
Payments every month.
Absolutely.
So that system determines what your credit score is. Everyone has one, right?
Correct.
Regardless, right?
Unless you have absolutely zero credit whatsoever, or you haven't had any in, over 5 years, then you could potentially have zero FICO credit score, 000. But
all right, so they have the credit score, and then after that, what happens then?
So, it comes down to, like I said before, most important thing is income, but then second is the credit, and when I say income, I really mean income / work history.
Work history.
You've got to have the work history too, but the credit, you're not going to be able to get financing if you don't have good enough credit. So that's where we work with people all the time to help.
And you want those scores to be up there. All right. When you mentioned FHA, what does that mean?
Federal Housing Administration, HUD. It's just a program that has looser restrictions to try to help, folks obtain financing. It's not as restrictive historically as conventional financing. It does carry with it costs associated with the higher credit risk that program poses. So there is what's called an upfront mortgage insurance premium. It's 1.75% of your loan amount. And so that could be, $5,000, $10,000, but it's not paid out of pocket. So it's rolled into your loan, and then that goes into their fund. Plus there's mortgage insurance. It's like PMI. You hear about that, but it's not private. It's a government mortgage insurance, which you pay monthly into that insurance fund as well. And it just protects against those who do go into foreclosure, for example.
What's conventional?
Conventional is historically Fannie Mae and Freddie Mac financing, and it's where if you put down 20%, you're not going to have that private mortgage.
Right, you won't have the PMI.
Mm-hmm.
Right. That's a.
But you can
FHA
put as little as 3 or 5% down with conventional financing, but you'll have that private mortgage insurance because it's insuring against, defaults.
Now, we've been talking about properties. We've been talking about trying to make it affordable for individuals. Simonian, Murray, Raymond, Capece is an attorney. He's joining us here on Unity in the Community. I'm Ernie Floyd, and Chad Rankin is with Guild Mortgage right here in the city of Worcester, mortgage originator and team leader. One thing we forgot was the fact that we didn't mention is if I'm interested in a particular property and I go, okay, I have my down deposit, at least I think I do. They go see you. And then there's more to it just in affording that mortgage, because then you have to have somebody go out to appraise that property, right? As they go out to appraise that property, there's certain guidelines in that too as well, because of the fact that if this property has to be cleaned to a certain degree, you can have, well, depending upon the mortgage plan, because if you have chip paint, potentially lead, and now you're in another category when it comes to trying to purchase that home. So there's other different requirements that people have to jump over those hurdles for too as well. So what happens when you go out to investigate a property or send out the person who's going to appraise it and look at the property, and they find all these different things about the property?
Yeah. So we work with some really bright, real estate agents, realtors that have been in the business for a long time. So they catch all this stuff when they're out there with the client, and they do tell them that might be an issue, because they know that with FHA financing, peeling paint is not acceptable. That has to be remedied. And if an appraiser comes out there and sees that, he's going to flag that. And then that's going to come back to us, and the appraisal is not going to be good. It's not going to be as is. It's going to be subject to that being remedied. or missing hand railings. There's different things like that. Now, when you're purchasing the property and you have your inspection, which is right after your accepted offer, typically, unless you waived it, but that's not typically advised. You want to know everything that could be of issue with the property. Your realtor is going to walk you through that and everything, kind of prepare you what you should expect, but ideally even before you have that inspection. And then there's the appraisal, which is us, and the appraiser will go out there and mark, as I said, anything that needs remedied.
So the home appraiser and the home inspection person is two different people.
Yes,
correct.
Like that. And some people may notice things and some people may not notice things, but yet if it's picked out and it's showed to them, they say, look, I don't have enough money to have a home inspector. Let's just go forward. Let's just go with it. So some people will say that, okay, you want to save money on the front, but it may cost you in the end.
Right.
And that's where the attorney part comes in, Ray, and where things may happen your way. What's going on with that?
Right. So in situations, where you have a home inspection, right? And there are several things that pop up. We step in and negotiate on behalf of the buyer with the seller's attorney for repairs that may or may not, the other party may or may not want to make. But you don't know what those issues are until you have a home inspection done, even if you have it done just for your own peace of mind.
Of course. It could be right there in front of you. You may not even know. But then also we'll say it really applies to you when it comes to a 2-family or a 3-family. Because if everything's said and done, everything is signed, that person owns the home, and that resident comes out and slips somewhere or something happens and they own the property, and then you're in another category, basically, especially with the fact that, and one of the main things too, when you buy a property, you have to have fire detectors as well. And there's different ones. There's battery ones and there's hardwire ones. It all depends upon the nature of the property.
That's correct, right? There's the standard code. Fire department in the respective city or town come out and inspect for that, and that's a part of a seller's responsibility when they are conveying the property. You have to produce that at the closing.
Yeah. Yep. Simonian Murray, Raymond Capece is representing that organization, which is a attorney real estate, and also Chad Rankin, mortgage originator, Gill Mortgage. You mentioned early in the very beginning when we first had this conversation, the compassion you have when you're trying to get individuals here in the community, and in particular Worcester, Central Massachusetts here. And you've been at this for a number of different years. And there's two types of people in your position that will approach it. Either A, just bring as many people as they can. It's a numbers game, regardless of the situation. That's their responsibility. If we get them in, get them signed, we get our money, and it's up to them, meaning the residents, to figure out whatever is afterwards. But that's not the case with you guys. You guys come in, someone recommends and trusts you guys, because there has to be some trust, because there's a lot of money being exchanged, a lot of responsibility that's involved on both parties and all parties. You want to make it safe as possible. And before we go, we're going to find out how people can contact you, and why is it that you guys are so compassionate about making sure people get into homes safely.
Right.
Yeah. So I talk to people, I ask them straight up, do you dream of owning a home? If you do, great. If you don't, you don't. I'm not here to do anything except for help you do what you want to do. And so that's our mission. We love doing it.
We love seeing people end up in the home of their dreams, or a more comfortable situation than the one that they're coming from.
People know whether or not they want to, or they dream of owning a home, even if it's just over here and they don't think it's a possibility. Mm-hmm. They know that they want to, okay, if they want to.
So lastly, Raymond Capece, once again, Simonian Murray, where can they find you?
So you can go to simonianandmurraylaw.com.
Okay.
You can find us there. We're on Facebook. And if you want to come down and speak with me in person, just come down to 39 Salisbury Street and go to the second floor.
All right. Chad Rankin,
yeah,
Guild Mortgage
for me. Yep. Just simply Google Chad Rankin Mortgage, Worcester. You'll find my Google page there, or guildmortgage.com/Chad Rankin.
Thank you, Gil. Thank you, Raymond. And thank you, Chad, for joining me on Unity in the Community. Once again, that was Unity in the Community. I'm Ernie Floyd on Unity 979, Worcester's Community Connection.